Hi everyone, welcome to FinTech Academy. This is Harsh. Today I will go over and show you the refundable versus non-refundable tax credits in Canadian income tax T1, which is also the personal taxes. All right, let's have a look at that. Right, so what are refundable and non-refundable tax credits? Well, before that, there is something that is called deductions. So deductions from income reduce your taxable income. So what does the deductions do? They basically reduce the taxable income. While tax credits are amounts that reduce the tax you pay on your taxable income. So that's the small little difference between deductions and tax credits. Well, deductions will reduce your taxable income. Whenever you learn income tax, the words taxable income are very important. So that's what deductions will get it down. Whereas tax credits are the amounts that reduce the tax you pay on your taxable income. The more tax credits that apply to you, the more you can reduce your income tax. So basically, yes, we know the tax credits definitely they help you reduce the tax you pay on your taxable income. But how do I get my taxable income down? Well, that's where deductions help. So this is how this whole structure works. And let's say once you know your taxable income, then the more tax credits that apply to you, the more you can reduce your income tax. The federal, provincial, and territorial governments each provide tax credits, which you can use to lower your taxes. There are two types of credits. First is the refundable credits and the other is the non-refundable credits. Let's understand what both of these are and what's the difference between them. Right, so on my left we have refundable tax credits. Refundable tax credits not only reduce the amount of tax you have to pay, but they can help you get a tax refund from the government. So we can already see that refundable tax credits is the one that can get you a tax refund from the government. On the other side, which is on the right side, I have non-refundable tax credits, and that is non-refundable tax credits are designed to reduce your federal tax payable, but they don't create a tax refund. So they can help you reduce your tax payable, but the non-refundable tax credits cannot get you a tax refund. So depending on what credits are applicable to the taxpayer, which is kind of like, you go through the calculation on the income tax form, and whichever it is, it will decide whether they will be able to get a refund, yes or no. All right, further on the left, which is refundable tax credits. A refundable tax credits, even if you don't owe any tax, the total amount of your refundable tax credits will result in a tax refund and will be paid to you. So whatever is the amount that will be given back as an amount if you don't owe any tax to the government on that. So that's what the refundable tax credits are helpful, that yes, they can get you a tax refund. On the right side, for the non-refundable tax credits, the key difference between a non-refundable and the refundable tax credit is that in the event your total non-refundable tax credits equals more than the amount of tax you owe, your amount owing will only be reduced to zero. This means that the excess amount of credit will not be refunded to you, and that is what is a non-refundable tax credit. That if you say, hey, you know what, I have tax credits which are higher, but I have nothing to pay, my tax is zero, can I get my amount back or whatever it is, or something like that? Well, no, that means that the excess amount of credit will not be refunded. Whereas in the case of refundable tax credit, yes, you can get those amounts back. Okay, so of course already we know that refundable tax credit seems to be more favorable favorable for the taxpayer against the non-refundable tax credits. But just to let you know, there are very less refundable tax credits available, and most of them which are available are for low income earners. So examples of the refundable tax credits are Canada Workers Benefit, which is called CWB as well. Then medical expense supplement could be a refundable one, the GST HST credit or the sales tax credit for the province of Ontario or at the provincial level, wherever it is applicable. Whereas against that, the non-refundable tax credit, of course, there are quite a lot of them. Basic personal amount, BPA, age credit could be there depending on your age. Donation tax credit, which is a big one as well. Tuition, education, and textbook amount eligible dependent for tax credit. There are lots of them which could be applicable to the taxpayer. So guys, that's the difference between a refundable tax credit and a non-refundable tax credit. Let's have a look at a calculation example for non-refundable tax credit. The amount of taxes reduced by said tax credit, whether the amount is equal to $100 or $1,000, is calculated based on the lowest tax bracket, which is 15%, no matter what tax bracket you are actually in. So what does that mean? Well, someone says, you know what, I'm earning $150,000, right? And my tax bracket, of course, is not 15% because that's a minimum. Now, if you want to know more about the tax brackets, then I do have a special video on that tutorial, which I'm going through the tax brackets for 2021, right? So probably they will be in the higher tax bracket, definitely not 15%. It could be more than 20.5, it could be 26%. So they might be thinking that, okay, will I get a tax credit of non-refunded at that tax amount? Like, mean to say, if I'm paying at 26%, no, everyone gets at the same, which is 15%, no matter what tax bracket you are actually in. So if someone's I'm a higher income and I pay more tax, still you get 15%. And if someone is a low wage income earner and they pay, let's say, $50,000 if they're earning, and they're in the 15% or a little bit more than that, still they get 15% as an amount of tax credit. So for example, let's say you have become eligible for a $5,000 tax credit. That does not mean that you're going to get $5,000. Well, you're going to get 15% of that $5,000, which is equal to $750, and that is what is the amount of tax that you will owe less to the income tax come the year. So basically, whatever is your non-refundable tax credit total, 15% of that, except one tax credit, which is donations, which can be a little bit higher than 15% depending on the amount that you are donating, right? But otherwise, all the tax credits of non-refundable will be hitting a percentage of 15%, and you get that amount. Each province also provides additional tax credits. So at the provincial level, whichever it is, right, you also get it. For Ontario, it is 5.05%. That's the lowest tax bracket. You start off and you get that credit. All right, let me show you in action in profile that how where the non-refundable tax credits are located, and the few of those refundable tax credits. Right guys, so I'm right over here in profile, and the non-refundable tax credits, which is right over here, is a step 5 in the federal tax form or the income tax form that we are looking. Alright, so what does it show first over here is the federal tax on taxable income. So percentages by whatever is applicable to the taxpayer: 15%, 20.5, 26, 29, and 33. This taxpayer is having a income of as per line 26,000 is $51,069 and change. So they will be falling in this particular tax bracket, 15%, and a portion of it in 20.5%. Now, if you want to learn that how this whole tax calculation works. I have a separate video tutorial which explains that, you know, how these percentages and why it is a progressive tax system and all those stuff. So please look at that video and you'll have a very good understanding on this portion over here. For now, in this example, we can see that, you know, this individual has a taxpayer has a tax to pay of 7799 and 84. So basically that's where this guy is standing. Federal non-refundable credits will kick in thereafter. Okay, so we can see that 13229 is the first one, which is also called basic personal amount, shown over here, which is for every individual, right? You'll be able to see that. And if any other tax credits, like for example spouse or a common law partner, amount for eligible dependent, Canada caregiver amount, if we go down further, of course there's a portion of CPPEI already done. If there is something like, you know, home buyer's amount, if the individual has bought a home, there could be adoption expenses, there could be disability amounts, there could be tuition amounts. All of these are tax credits. Now there's a CEA, which is this one, Canada employment amount. Let's say the total of these credits will be shown over here on this line 33,500, which is 17,351 and change in this example. 15% of that is what this individual will get as a tax credit, which is 2,602 and 75 cents in this example. So basically what happens is that, you know, that's his total tax which is owing, less the credits which is accumulated, right? This particular amount 5197 and change is the federal tax that this taxpayer is supposed to pay. Still, it is not done. If we go down further, the, you know, anything else that is going to help this individual will show up, and that is the net federal tax credit amount we see. If I go further down, it becomes a tax to be paid is 7945. So how did it jump? Well, you know what, don't forget the provincial component that has kicked in, and that's why this taxpayer has an amount to pay of 7,945 and change. Well, the good thing is that they already have paid a tax amount of 9,215 and change. And how come this came here? That's because we might have recorded T4. I might have done that before. And you can see box number 22, maybe their employer has already deducted that amount of tax, right? So that has shown over here. And you know what, with that being showing up, this individual is going to definitely have a refund. We can see over here. That's a refund amount that they have. So basically, coming back to the topic of the non-refundable tax credits, you can see over here on line 35,000 that how much is the amount of non-refundable tax credits, whichever is applicable to the taxpayer. They get 15% of that as an amount to claim. Now you see the non-refundable, but where are the refundable ones? Probably you're more interested. Well, right over here, one of them is sitting, which is a Canada workers benefit, right? If I go to this line 45,300, double click on that and go on the top, it's going to explain that it is a it's a refundable tax credit. So it says the Canada workers benefit, CWB, is a refundable tax credit that is intended to supplement the earnings of low-income workers. So there's a schedule on that, but that's a refundable tax credit for low-income earners. That's one of them. The other one is just above that, refundable medical. So if I double click on that, that is also a refundable medical supplement tax credit, which shows. So as I explained in the slide, that there are not a whole lot of refundable tax credits, and most of them are for low wage income earners. If there is something, then yes, so you can put it over here, and if you're using a software, then probably the software is going to spit out those numbers for you. All right guys, so that is what is the few of the credits that show up over here in the income tax form. Right guys, hopefully you found this video helpful about the refundable and non-refundable tax credits. If you did, then please like our video and subscribe to our channel for more videos. Also let me know in comments what would you like to see in future videos, i.e. Harsh, I want to see this video, or Harsh, can you make a video on this topic for accounting and bookkeeping, QuickBooks Desktop, QuickBooks Online, Microsoft Excel, Canadian Income Tax T1, Canadian Income Tax T2, or Canadian Payroll. Alternatively, you can also visit us at fintaxsolutions.ca for our courses. Thanks for watching.